Good morning, everybody. Mike Vacchi, PrinceandTrader.com, here for NTMarkets.com with your Monday morning pre-market webcast. Okay, the Bears, the Bears went and did it to themselves again. At least that's the way it's looking this morning. We came down on Thursday, blasted through both the lower Bollinger Band, this is the 2 standard deviation Bollinger Band, blasted through the 50-day exponential moving average, which on June the 5th, on Wednesday, had been support. Blew through that and really got overextended down into this gray line here, past the 3rd standard deviation Bollinger Band. And when you get past that 3rd standard deviation Bollinger Band, there's a lot of people out there that would agree with the approach, and I would too, that you just, you just buy it. And if it's on the upside, like we saw here, you sell it. Because you're so far out of the lane, so to speak, that, the probabilities are so far on your side that you're going to get a snapback that you can buy with pretty good confidence. The question then becomes, what do the bulls do with it? Can they follow through, or are they not going to be able to keep it up? And what you would typically see with the Bears, when we hit this upper band here, they kept it up for a little while, but ultimately they broke back through the middle Bollinger Band and it was off to the races. Well, now we're right back at the same area here with what are the bulls going to be able to do. We have snapped back. We followed through very nicely on Friday. Middle band, resistance. So far in Globex, middle band is resistance. The best way to think of this right now is that the Bears have given up as much ground as they possibly can. If the Bears give up the middle Bollinger Band, in my opinion, we should see new highs above 1685, 75 over time. I mean, that's not going to be a rocket ship up there, although you have to understand, once you get through the middle band, aside from a couple of way stations up at up in 1662, 1673, 74, then you're getting back into a middle band test, and that will be important. If we do a test of the an upper band test rather, if we do an upper band test without making new highs on price, then the Bears have a chance to push it down again. But unless this middle band stays sealed as resistance, I don't see new lows coming before we test the upper band. So we're in a key area for both the bulls and the Bears, and we need to answer some questions about what this market wants to do over the course of the month. The Bears had their chance to really turn it away and knock it down. They needed to do that on Friday after the one-day snapback, but the bulls ran with it, as they usually do. So here we are back at middle band. So that's my focus of the day, to say the least. No key economic news. Fed's Bullard speaks later on today. We had the jobs report on Friday. It was in line, and it was initially sold, but then you'd have to call that reaction positive. And whether that's because it keeps the Fed in the game or not is all speculation, but we're getting back to where any news is good news, and that's not a positive for the Bears. Tomorrow you've got wholesale trade, nothing all that big. Wednesday, nothing significant aside from the crude inventory numbers. Then you've got retail sales and jobless claims on Thursday, import-export prices. Friday you've got PPI and industrial production. So as we get later in the week, you see the economic news becoming a little bit more important. In the absence of news, what do I always say? In the absence of news, the market goes higher. So in a vacuum, we trade higher. We'll see if that continues to play out today. Okay, everybody have a fantastic day. Mike Vacchi, PrinceandTrader.com. Check out the website. Check out the chat room. I will see everybody tomorrow morning with another webcast. Trade them well.